Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
Hey, how's everyone doing?
What's up, man? What are you doing? I feel like we haven't been on here this week. I don't even know what to do. It's like we're amateurs.
It's Friday, baby. It's Friday. It was we did a live on Tuesday, and I kind of forgot I had to use all these controls. I'm setting all this up, and I forgot, but we're live, so that's the good news. Welcome to 6 p.m. Friday night, Friday, May 1st. We're timestamping all of these videos and feeds. Obviously, super important because we're still in the midst of everything and things are changing very regularly. So a lot of the topics that we have discussed in the past might not be relevant anymore, and vice versa. So just want to make sure we're timestamping everything for everybody. So welcome to the Real Estate Reserve Podcast. So pretty interesting stuff I was just thinking about. It seems like everybody I know in real estate right now is super, super busy. Seems like in general, real estate as a whole, like people are more in the weeds and more crazy than before. It could be that a lot of the lenders aren't lending anymore, so the lenders that are still lending are very active. It could be that a lot of real estate investors in general are kind of uncertain, so things are on pause until they're back. It seems that, consumer confidence and investor confidence is a little bit down right now. So in general, everybody who is still working and actively grinding day to day is doing so. And, obviously that's a good thing. And the strong is going to continue to survive.
Yeah, it's definitely been a crazy time. I will comment. First, I can't find how the heck to share these. Facebook changed its stupid feed around. So we'll have to do it at a later point. But yeah, no, this week, and I think that's the reason we didn't have a chance to go live as much, is that we really got bogged down back to like, I don't want to say transactional type work, but it seems like real estate's back on. Like, it's moving, it's shaking. Today was a big day, May 1st, right? With, are people going to pay rents or mortgage payments going to get paid? And honestly, for us, status quo, rents are coming in. Those that were in need of help are pretty much in the same position. Those that, consistently pay. We had no issues with all of our auto pays, and we're on the move. I mean, I think we've really lucked out through all this. So I do agree that you see real estate back on. I think there's a lot of news over the last weekend and early part of this week that put a lot of consumer confidence back in place. Now, granted, we're in Maryland. I don't want to get too political, but we're doing stuff a little different than a lot of other states. So it'd be interesting to see how the market comes back or doesn't come back. So,
sure,
that's kind of where I'm at with that. We had I guess the problem is, now there's like talks of like the beach not opening. I know a lot of Airbnb people rely on that. There's talks of stuff not opening up till September. That's a pretty crazy timeline. But for right now, it seems, I would say, and I don't know what you're seeing, but I would say confidence is still pretty good. Well, we're not actively looking for new deals. I did have a good conversation with a bank today about refinancing a piece of our portfolio that we are coming up on a note that we're looking to refinance. And he said, yep, send it over. We're ready to rock and roll. And we're still actively doing deals. We're dying to do deals. So,
yeah, that's good news. I think everybody's dying to do deals, but the right deals. We've talked about this from the beginning 40 days ago, and we've continued to. And we've got some scrutiny based on these comments, but we've been very optimistic. We've been cautious, but we've been optimistic in general. And keep in mind, at least locally, there's a lot of predictions of what's going to happen with the housing market over the next year and further. And I think the most recent prediction was like a 15% decline. We haven't seen any of that yet. Do I believe that we're going to see that? Absolutely. I believe we're going to see that. But just by consumer, and yes, maybe in general, consumer confidence as a whole is down. I mean, keep in mind, real estate investing is such a small segment of real estate in general. It seems that, everyone who's actively investing are still doing stuff. Projects are still getting done. We're doing draws every day for real estate investors that that we have rehab loans against. And I see all the projects, and I see lots of contractors there. I see the projects getting done. Things are moving along. Whoever is optimistic, proactive, doing the right things right now is going to come out on top. It's that simple. I mean, there's deals to be had. Do I think, and we can reiterate this if this is the first time kind of hopping onto this podcast, do I think that there's home run deals out there right now? Not so much. Do I think there's opportunities out there? Sure. The reason I don't think there's home run deals out there is there's not enough pain in the market. April 1st was a big month or a big day. May 1st was a big day. Those are days when mortgage payments are due and tenant and residents rental property payments are due in general. And homeowners don't have enough pain yet, right? Because maybe they're behind on their mortgage, and I'm talking about in general on a broad level. Maybe they're behind on their mortgage, but they're not too far behind their mortgage. The bank can't foreclose on them anyways. So unless they're looking to move, or they just need quick cash, or they just kind of had enough, they're not going to just walk away and sell their property at a humongous discount. And the same with tenants in general. Now, I will say that I think some of the big landlords or big commercial property owners have a little bit of fear that some of their rentals payments might not have come in April and going to continue now. So they might make emotional, harsh decisions, which is the worst way to invest, is by making emotional decisions of, I just want out of this business. I'm not getting rent anymore. I'll fire sale these properties and get out. If you're fortunate enough to get involved in a deal like that someone's going to fire sale a project, that's fine. I mean, we've been looking at opportunities where other institutional backed hard money lenders have notes that they can't sell on the secondary market. And they're coming to us to see if we can liquidate some of those notes for them. And again, there's not enough pain in the market. They want to sell them like they were selling them to Pier Street. Like, that's not going to work for us. That doesn't work. But again, based on where pain is, supply and demand is, there's going to be opportunities. We quoted, we had a thing that went out to our partners, and we said, listen, every good opportunity we're going to continue to act on right now, but in general, we're slow and steady, right? We're going to keep moving along, normal business, and when we see a good opportunity, or I shouldn't even say good opportunity, great opportunity, we're going to jump on it, right? We're not going to jump on just normal, outside the box transactions unless they're that good. And I think that's what everybody wants to do right now. They want to keep their normal business in place, because you need to keep normal business in place. If you're a full-time real estate investor, you got to buy properties, you got to sell properties, you got to rent properties, you got to do whatever you're doing inside your business. If you're a wholesaler, you got to wholesale properties. You got to continue to do business. And obviously now's not the time to do aggressive, crazy stuff, but as you're continuing business as usual to do your normal deals, be opportunistic. That's where the real money is going to be made in the future.
Yeah, 100%. And, we did talk about that earlier today, and we wound up going down a little hole about growth. And I think we should discuss that a little bit further, because everybody wants to go out and just do. I am a victim of my personality of go, right? All I want to do is grow. And I will say, luckily over the past few years, I've learned that, you don't always have to be the biggest. You don't always have to be the baddest. Singles win the game, right? Like, remember playing baseball or softball, hit the singles, and you'll score runs. Luckily, over the past few years, that's what we've been doing. And now's the time to continue to hit singles. Look, if you're out here and you're still doing what your core business does and you can still hit singles, that's great. Sure, there might be a double coming up. We don't know where the market's going to go. Like Jason said, we don't know where the pain is. And if you hit a home run, even better in these times. But if you can continue to hit singles, you can stay on base, and you can keep your business afloat, you're far ahead of a lot of other people out there. And while I don't want to be dim and talk about doom and gloom, people are going to go out of business. I know Jason in his business is witnessing other companies literally turning off lending overnight. In my part in real estate with rental properties, there's going to come a time and place when people have pain, real pain of not being able to collect rents and not being able to pay their mortgages. And that's where our home runs are going to come in. But until then, we're just going to continue to hit singles. And that's the key to any business, right? And I never thought me of all people would ever step up and say something like that. I guess you could say I've kind of matured over the years, but continue to hit singles and it will work out for you over and over and over again, 100%.
I mean, we've been base hitters for 13 years. It's very rare that we've hit a home run on a project. Everything's been slow and steady. And then when a really good opportunity comes in, you jump in. And yes, some opportunities are better than nothing. But kind of to reiterate what we just said is, as real estate investors, you got to continue to do business right now. You got to continue to do business, right? You got to continue to make payroll, to cover your contractors, to cover your current projects that you're doing. Does that mean do bad deals? No. Does that potentially do smaller deals with skinnier margins and maybe you be more of an operator than a visionary in the past? I mean, I've talked to many business owners recently that they're back in the field kind of doing a lot more hands-on stuff than they were doing in the past because they've needed to. They couldn't either afford their employees or they couldn't kind of sit back and orchestrate it. And that's fine. Part of one of the reasons why we're in general extremely busy right now is, we're covered, number one, the transactions are slower in general because, between title companies, people working from home, additional people working from home, it's a slower process. It's not kind of a well-oiled machine like normal, like this person does this or this person does this. So a lot of that time is set to that, but that's what you have to do. I mean, when we started our business in 2007, the hard money lending business, like my business partner Chris and I, we were doing everything. We had to do it. We had to do everything. So we know how to fill in all the gaps when needed. And I think in general, so many people over the last 10 years, or at least 8 years, have gone so fast, so quickly, and then not really even sure what the heck they're doing, and then realize they made money on a transaction, and then would do another transaction like that, made money, did another transaction, made money, and half the time, half those deals weren't even that good, but the market continued to go up and up and up and up and up. So like right now is the big stress test to know if the types of deals that you're currently doing, the types of deals that you have not cashed out on yet are going to make money. Time will tell. That's where it goes. I believe that the deals that people are doing, originating, buying, putting under contract today are probably going to be better than the deals that they did 40 plus days ago, between 40 plus days ago and 8 years ago, just because where it is, there's more opportunities. We asked, I don't remember who we asked this, either Steve Kavanaugh or Alex, about when they get questions all the time, like, when's the best time to get into real estate? Well, the best time to get in real estate was either yesterday, second best time is today. It's that simple. There's always opportunities. When the market's going up, when the market's going down, when the market's going sideways, there's always really, really, really strong opportunities. And we talked about this, Ian, related to long-term holds and rental properties in general. You buy a property today, right? You buy a property today, yep. You underwrite it today. You're going to do the best due diligence and the best job that you can in order for that deal to perform, right? Tomorrow it might go down 10%, right? And you look at yourself and say, okay, I made a bad decision. Well, guess what? The property by tomorrow, you use that underwriting and that criteria that you have and the resources you have in play tomorrow to determine how you're going to purchase that property, right? So if you just adjust everything as a whole, one property bought for 100, one property bought for 110, one property bought for 80, and you adjust everything in general, it'll work out. And the beauty of real estate investing in general is every individual property that we all buy, that we lend on, that we invest in, that we hold as a rental, they're all individual assets, right? Yep. You got some really good ones, some dogs, and some in the middle. And in general, you learn from it and you continue to do so. So I don't believe that right now is a time that a lot of investors shouldn't be investing in assets. Do I believe that they should pivot into some smarter, shorter term stuff? But maybe not shorter term stuff, but quicker exit properties. Yes. Absolutely. We've talked about this with everybody. Everyone that's investing wants smaller properties for flips, like smaller construction project for flips. They don't want to get involved in a big condo conversion in Washington, D.C. right now. That's going to take them 11 or 12 months to get permits in a 2-year condo conversion process. That sounds like a nightmare. They want to get in smaller renovation projects in the median housing price neighborhoods. And then landlords want to get in and out of projects and make sure that they have a good capital stack associated with the transaction, that they can get long-term rental stuff. And I'm a long-term rental product in. And I'm glad that you mentioned that right when we started, that you reached out to one of your bankers on this. And they're like, absolutely, we're looking for for strong deals to put on our balance sheet to lend on. And they're happy you as a loyal client is coming back to them so they can deploy money through you, because banks are lending. Hard money lenders are lending. I'm not saying everybody is. They might have adjusted their terms, but everybody wants to deploy capital in this space.
Yep, 100%. And speaking of deploying capital, I do know that while the one bank was willing to fund us, the other bank where the PPP loan came from said that they are not funding because they got all hands on the PPP loan. I did learn an interesting fact, and now I know why some of the community banks are actively going at it. I believe they're getting a 5% fee for every one that they're closing. So it makes sense why some of the banks are doing that. I had an interesting conversation with my lawyer at like 10 o'clock at night. He's like, man, I've been trying to get the PPP loan. I've gone through 2 or 3 different banks that we utilize. He's like, the bank that you used, People's Bank, reached out and said, hey, if you don't have a banking relationship with us, we'll get you approved for the PPP if you qualify. So I shot an email. I said, hey, as a recommendation, this is a really close friend of ours. We do a lot of business with. I hope you can look out for him. And I don't think our email had anything to do with it. Just like the email stated, 24 hours later, he had an approval. And honestly, as a title company and a real estate attorney, there's not a ton of deals going on right now. He's like, every day is a Saturday. And I was like, yeah, that's a pretty good analogy as long as you're not drinking every day. But every day can be a Saturday right now if you don't have work to do. So I was glad to see that he got approved for PPP. My cousin, who owns an insurance he's not an insurance broker, but he does something for claims, owns a company. I know he got approved, and a few other people. So it is good to hear that people are actually getting funded with it. And the CARES 2 Act, I guess, is still rocking and rolling, and there's still funds available for it.
So a few things. Yeah, I mean, everybody that I know that applied for Paycheck Protection Program, for the most part, that got approvals, and they did it through a local bank that they had a relationship with, had got funding. At least that, for most people
Yep.
I know. I can't say the same with the Wells Fargos and the Bank of Americas of the world, but I can say with the local bank that you had a banking relationship with, and again, that's putting pressure on them as well to do to help you with that. So those work. Related to this attorney you're talking about, he's saying he's not busy at his title company, or he is?
No, he said he does a lot of investor work. That's really his wheelhouse. He's not he doesn't do a lot of homeowner type stuff. So he said it's been a little bit slower. They're still doing deals, but it's not the normal volume that he's used to. And I guess that's what you got to put in perspective, is that it's not his standard volume.
Yeah, because the title companies that I've been talking to seem to be extremely busy, and just in general, mostly just not headache stuff, but like coordinating stuff when parts of the business are not shut down, but slower, is complicated. So we have Bill Daly from Liberty Title. If everybody knows Bill, he'll be on 3 o'clock on Tuesday. We're going to do a show and hop on, and I wanted to get him on because he's working on some files for us in general. And the interesting thing is he's like, I've been slammed. Number one, he's got to go to closings and coordinate closings. I'm not sure if he's the only closer or not, but he has to coordinate closings. And he went through a few things with me on the phone, and I want him to share that with everybody related to, well, I have a few different types of ways that we're doing closings. People come to our conference room, and I sit on the one side with gloves and a mask, and they sit on the one side with gloves and a mask. I've done that. I've had appointments in parking lots where I go to cars and open their window, give them the docs. They sign them, and then they give them back to me.
I'm like a bad drug
deal. and everything from that, traveling to other people's places to do that. I know a lot of these big banks won't allow the online remote notaries. Hopefully that'll change and pass, that most big banks will allow that, because that will help with some transactions in general. Everything that I've been told, we have not done a closing like that yet, but we're comfortable and approved it internally. It just hasn't come up. There's no title exception on the commitment. So as long as that's the case, we're comfortable with it. Banks have not fully been yet, but I guess we'll see where that goes. So I'm going to get him to talk. We're going to pin him down and have him talk a good bit about that. But it seems that all the title companies we've been working with seem to be very busy and occupied. Obviously, they had this mini refi boom for a long period of time, and that's gone. And all the refis that existed, it was weird. They had like a internal secondary market inside each bank as they were inflating rates based on supply and demand and how much they could cover as the rates went down. So, you know what? I have my buddy, another mortgage guy. I'm gonna get him on here next week too. Remind me of that. We'll get Dino Broccolino on here from SunTrust. He'll do this with us. I'm curious to see what he's seen because I haven't talked to him since all of this went down. So we'll get him on here. We'll see what he's up. But yeah, in general, I mean, I think the investors that are actively doing stuff and real estate agents as well. Like, listen, if a real estate investment or real estate agent transaction might have been an easier transaction in the past, it's definitely slower now. So that makes people busier. And I would hope in general that anyone who has downtime right now and they want to grow. I'm not talking about someone who is content with, doing their few deals and that's it. I'm talking about someone who's hungry and wants to be proactive and wants to take advantage of this, and they don't have the transactional work like some of the other people do. Go out and start creating your marketing campaigns right now. Go out, put your systems and your strategies in place. This is the best time to do it. It's the absolute best, the best time to do it. Like, if you're not bogged down with other stuff to do, figure out ways. Like, this is the reset and the opportunity to put a lot of other things in place inside your business.
And that's what kills me is that this week, I was on a roll. I know, was it this week or last week? I said I was going to finish that funnel for a new marketing campaign we got. But this week, man, it was just like out of control. That like everything like turned back on, and I'm kind of mad at myself that I got derailed. And I foresee people in the future that as soon as everything's considered turned back on or they're ready to rock and roll, I don't want to say all hell's going to break loose, but you're going to lose sight of these projects that you wanted to complete. And that's something to be wary of, that, when things come back on, take it slow and steady, do it right, make what's right for you. And if you want to get these long-term projects done, get them complete. That's my goal next week, is to finish that out. I'm really mad. It is kind of a complicated project, and it was probably going to take me more than a week, but I did get derailed with what happened this week.
Yeah, I mean, and that happens. That's part of it. I mean, transactional work is a big piece, and the growth and the marketing and the higher level stuff has to occur. And unfortunately, these days, that I've been doing a lot of that early morning and late at night because I have on my to-do list of some of those projects that have to get done. Even though I've got a lot of transactional work that's getting completed, and these days, and we've all talked about it, the process in general is a little bit slower. Getting additional documents from people, figuring out, it's just slower in general. So,
yep.
Who else do we have Friday next week?
So Friday we're going to do a case study with Matt Fullerton. He's a wholesaler. He's done some impressive numbers. We're going to do a case study on a hoarder house that they wholesaled. We're going to get some interesting information to what they're seeing in the marketplace, how they're setting up their marketing campaigns, what their goals are for their forecast is for the the rest of the year. I think they had lofty goals. I think last year they did close to 7 figures in wholesale fees. So I'd be interested to see what his expectation is for the rest of the year with everything that's taken place, and where he sees the market to head, or where it's headed.
Nice.
So
don't we owe a shout out to somebody who just had their first kid today too?
We do. Jim Chivers had his first kid, baby girl. I don't want to butcher their name because I don't exactly remember what he told me the name is. I think it was Charlotte or Caroline. But either way, congratulations, Jim, and to the wife. Jim, you don't even know what's about to happen to you. So congratulations.
First kid. I remember those days.
Yeah. Next, you wind up with 3, 4, 5, 6.
Easy as can be. One kid at a time. You need one kid per parent. He's got one kid for 2 parents, so it should be easy for him.
Oh yeah, and she'll be like, oh, the baby, and she'll be taking care of it. You won't have to do much, Jim. So I expect you back at work on Monday, 7 a.m. I'll be calling you first thing. So,
some commercial asset. Tell them we're all looking for some good distressed commercial assets to get our hands involved in.
Yes. If he finds them, we will get him back on here and let him present them, because they are some nice deals when you do them. And we just lucked out on one that we finished up on. But I think this weekend's going to be nice. Great weekend to get out, enjoy the weather, do your thing, whether you believe in what's going on or not. Enjoy the weather. We're going to get the boats squared away and get the creek house opened up. Hopefully, do some fishing from land and
yeah, because you're not allowed to go on the boat. You're not allowed to go on the boat, right?
You can fish for sustenance, but I don't want to put myself out there in case anybody's watching. But we might take the boat out and cast some lines and see what happens. So, but no, the weather's supposed to be good. I'm excited for next week to get back into 3 people next week. So I think that'll be awesome. Bill, and hopefully we can get Dino on next week, and Matt will be all good studies. Oh, and we got our cost segregation study underway. I'll be keeping people posted how that goes in real time as we go through the process. We're doing virtual surveys right now, and we're moving along with that. So,
gotcha.
But
all right.
Well, yeah, I think it's dinner time. It's Friday night. Have a drink, shut it down, enjoy the weekend, and we'll catch you all on Tuesday.
Check you later.
Thanks for tuning in to the Real Estate Reserve Podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time,